Well, good morning, everyone. Thomas Montgomery. It's a beautiful Wednesday morning, September 29th, 2021. We get together with our distribution partners most weekday mornings at this time, a minute or so before 8 o'clock Central. The purpose is to talk strategies, techniques, success stories, but ultimately support you, our distribution partners, so you can help more small businesses and so you can make more money. Today, what we're going to talk about is an interesting topic, and we've addressed it before, but it seems that it's time to maybe take a deeper dive and revisit the topic of key person policies. So I anticipate that this is going to be a very interactive discussion. So if you will have your question and answer box pulled up, it's kind of like a chat box within Zoom, go ahead and prepare and submit your questions, because if you're thinking it, others probably are as well. I'm going to quickly go through my outline agenda, and then most of our time will be spent, excuse me, addressing your questions, comments, concerns. And actually, I don't think there'll be any concerns, but if there are, we'll address those. All right, so I've got the screen shared here. We're going to talk about key person policies. That's our topic. The first agenda item is, what is a key person policy? A key person policy is an insurance policy, a life insurance policy. And there are three primary parties that we need to talk about, and there are some other ancillary parties. The owner, typically, of a key person policy is the business itself, not the business owner. So normally for a key person policy, it is an asset of the business. If it has cash value, it reflects on the balance sheet. It increases the value of the business. So who owns it? The business. Also, I should add, who pays for it? The business. So is this an expense to your client, the entrepreneur? No. No, the individual normally would not pay for it. Next, who is the beneficiary? There's a lot of confusion with this. Are you the beneficiary? Are we the beneficiary? Absolutely not. Is the bank the beneficiary? Absolutely not. The beneficiary is the business, because understand that when we have a business created, it extends beyond the lifetime of the owner or the owners. It's its own entity that technically has a perpetual life. So until it is shut down, it continues. So who owns the policy? The business. Who is the beneficiary? Normally, the business. The insured, the life that is being insured, is the key person. And technically, any business owner with 20% more ownership should have a key person policy developed. Now, we're going to talk about how you can monetize this and make money from this if you're a life insurance agent, but all of a sudden, I think light bulbs are going off, right? So, because at first glance, what most of us that are life insurance agents, I've been licensed since 1996, what most of us that are life insurance agents are looking for are leads, right? Because almost everybody wants to sell more policies. Well, this is an automatic lead, and it's almost an automatic sale because the way that it fits in to the loan package as we talk about. But furthermore, as you're doing your needs analysis, which we'll talk about again in a minute, if you find that the business has more than one owner, let's say it's husband and wife, or husband and husband, wife and wife, or whatever other configuration, anyone with 20% or more ownership, we should go ahead and write a key person policy on. It's excellent. Okay, so that's what a key person policy is. Why is it relevant? Well, it's relevant to our discussion because what you and I do are three things, right? When we help people in access to capital, we help build financial literacy. And I guess that applies a little bit here, but it's not the point I'm on. We help them build a loan package. That's especially relevant to the bullet we're on. And we help them provide access to capital. That's also relevant. So Having a key person policy is something that should be in the loan package, just like a business plan, just like financial projections. It's one of those items. If you go to the iimfl.org website, white label page, go down to where it says module 4, you'll see a bulleted list of the things that we want to put into the loan package. Guess what? The key person policy is one of those items. Now, I don't want to leave you with a misinterpretation. I am not going on record to say that every lender, that every loan, that every line of credit requires a key person policy. That is not true. But what you know is that there is no consistency. Let me rephrase it. Each source of capital has its own underwriting criteria. So do all of them require a key person policy? No. Do all of them require a business plan? No. Do all of them require established business credit? No. Do all of them require good personal credit? No. So we understand that there's different underwriting criteria for different sources of capital. When we're building the loan package, we're trying to get as much credibility arranged and available to give the client as many sources of capital as possible. Now, why a lender might like to see a key person policy required by the SBA, by the way, for SBA loans, but why is it protects the lender. So let's just pick from one of you. So we got Anna Marie on the call today. So if Anna Marie goes out and we help her get a 7A Express loan, SBA 7A Express loan for $150,000, 10-year repayment term. The SBA is the guarantor. There's actually a bank that's underwriting it. What is that bank concerned about? Well, if Anna Marie's not around any longer, who's going to run the business? Does she have a good succession plan in place? Will that business continue to operate? Will it continue to pay its bills? Don't know, because Anna Marie's not around. She's the brain trust of this theoretical company that we're using as an example. So that's why. So the lender would say, okay, Anna Marie, we'll loan you the $150,000, but we want you to have a key person policy. And that key person policy would have what's called a collateral assignment. Notice that wasn't listed up here. A collateral assignment is kind of an addendum to the life insurance policy that gives that lender first payment off of the face value when the key person, if the key person should die. So let's say that Anna Marie gets a $150,000 SBA loan. So we get her set up with a $150,000 key person policy. Now, as time goes along, the loan is being paid down. So unless she dies day one, then of course there's less owed to the lender than the face value of the policy. Well, the collateral assignment is only going to allocate the amount owed to the lender to pay them off, and the rest of it goes where? To the beneficiary, which should be the business. That makes sense, right? So we miss Anna Marie, and we're sorry that she's not around, that she's out of our lives. However, the business goes on. And so there's someone, friend, relative, employee, whomever she had set up that's running that business, and they miss Anna Marie's knowledge and expertise and time and involvement. And so that extra money that paid out from the life insurance policy better prepares that business to continue above and beyond paying off the loan. So why is it relevant to a loan package? Protects the lender. Now, I want to make sure that we're looking at this from a client's perspective. When we're helping a small business owner write a key person policy for his or her business, we should be looking at the business holistically, right? Because there's a very good chance that that business has other insurance needs, whether it be life insurance or others, which we'll talk about in a moment, above and beyond just the collateral assignment for a loan. So please, think first of the client, suitability of the client, do a good needs analysis, which we'll talk about in a moment. Thank you, David. So some of you are not life insurance agents. This is still relevant to you, and we're going to talk about different roles. So David, hang in there. And I appreciate not all of you are life insurance agents. I'm not trying to recruit any of you to be life insurance agents. And you'll see if you are an agent, you can write these policies wherever you want. So there's not some sort of ulterior motive. But this is relevant if you are involved as a white label partner, because what do white label partners do? They do three things. They help build financial literacy, they help build loan packages, and thirdly, they help provide access to capital. I see some of you not fulfilling your obligations. You're not helping build out the loan package. We got one guy, he fed in 50 or 60 people in 1 month, great month. But as I talk to those clients, and this is a white label partner, he's not done anything to build financial literacy. When I ask about modules, they're like deer in the headlights, huh? So it doesn't make any sense to them. I've got other white label partners who are not helping put together a key person policy in the loan package. Well, that is breaching your role. You are not fulfilling what you're supposed to do to help these clients get ready for funding. So if you are a white label partner or thinking about becoming one, or you are an insurance agent, this applies. If you're none of those, I'm with you, then it probably doesn't apply. Okay, so I love the questions that have no clear answer because it puts me on the hot seat. That's fine. And one of those is, well, how much does a key person policy cost anyway? And the answer is, I don't know. What we do know is that a credible and experienced and knowledgeable a client-focused life insurance agent is going to start with a needs analysis. It's not just about taking an order, like would you like an appetizer before your meal? It's doing a needs analysis to figure out what the heck's going on with that client and what their needs are. And if you do that, you probably will sell multiple lines of coverage. I used to work for State Farm. I probably told you this before. I was not a State Farm agent. I was a financial literacy educator for State Farm Bank. A lot of people don't know that they have a bank. But anyway, so with that, what we knew, and so I supported State Farm agents. I was not an agent, was not a PNC insurance agent. But what we knew is if you could get 3 or more lines of coverage with a client, then you got stickiness. You had a much greater probability of keeping that client long-term, maybe even lifetime. And so with that being said, you know, if you can do a needs analysis, you might find that they have other needs, either personally or professionally. There's a lot of people, probably none of you, because you all know better, there's a lot of people that have no disability coverage, short-term or long-term. How crazy is that to not have a disability policy? You're much more likely to be disabled than you are to die suddenly. And disability replaces the income so you can continue to live. It amazes me how many people don't have a disability policy. Well, as an agent, you're going to do a needs analysis and figure that out and help them solve that problem. Some people in today's society didn't have health insurance. How crazy is that, right? It's so expensive, it'd bankrupt you. So a life insurance agent would do a needs analysis and determine if that. Some people are not planning properly for their retirement, whether it be a need for an IUL or annuities or what have you. And so with that being said, there's other examples, other voluntary coverage. Some of you sell Aflac, Colonial, Legal Shield, so forth. So we're not here advocating for any of that, but the point simply is a good life insurance agent starts with the needs analysis, and the key person policy is almost always going to be a need. The chances that the small business owner has this set up already, next to nil, right? It's very unlikely. Now, they'll come back to you and say, well, I've already got a life insurance policy. Will that work? Oh, well, great, Ben. Let's talk about that a little bit. Is that policy owned by your business? No. Okay, is that policy, is the beneficiary of that policy your business? No. And so it's going to be very easy to overcome that objection or that obstacle of, oh, I already have life insurance. It could be, they may have life insurance, but is it for this purpose? Typically not. Okay, so This is going to shock you, so I'm excited for the response. I'm on the edge of my seat here. Normally, there is no cost for a key person policy. Obviously, it's going to be impacted by the policy design. What do you think I mean by that? So those of you that are a life insurance agent licensed, I want to know how you would respond to how this is the case. Normally, there is no cost for the key person policy. So Samuel, you're offering to do a needs analysis. How would you set up a key person policy where there's no cost? Mr. White, I know that you're a licensed agent. How would that be the case? There's got to be some others of you that are life insurance licensed. We don't track necessarily. Well, the tail end of this sentence is the caveat. I don't write policies anymore. I just don't have time. I enjoyed it and I wrote a lot. But the answer to that, the way that was a slam dunk for me, and again, you're smarter, more experienced, better at selling insurance probably than I've ever been. But the way I love to sell it, here's the secret sauce, is set it up with a return of premium, an ROP. Do a key person policy with an ROP. Because what does that mean? Return of premium. Either they die and the policy pays out, which is what its intention was in case of death, or they live and they get the eligible premiums back. I mean, you can sell ROP policies all day long. And that's just the first policy typically that you're going to set up with the client. ROPs are the key. Now, do you have to use an ROP for a key person policy? Absolutely not. You can use term, you can use whole, you can use modify, variable life, index universal life. But I'm just telling you from my experience, my humble experience, which probably means nothing to you, is ROPs are sexy because you can't lose. You either die and it pays out, or you live and you get that premium back, and you can use that later on the road for your retirement if you want. And almost everyone needs more money for retirement. Okay, I digress. All right, so now this gets back to what David was asking, and maybe I should have put this first, David, so that's my fault, not yours. So how does this impact you? And the answer is it depends on your role. What is your role? And you could be in multiple of these roles, but let's go through each. So if you are a licensed insurance agent and you want to write more key person policies, we need your help. Frankly, we're overran with the need to write these policies, and we need to get more organized and more proactive. So if you want us to refer to you, we need to put you on the list. Not charging you to be on the list, nothing crazy like that. So what you need to do is email me, and then we'll get you set up and get you added to the list, because we have a lot of white label partners, which we're going to talk about in a second, that don't want to write the policies, either because they're not licensed or whatever reason. So we need to get you on the list. We're wanting to create a new list effective October 1st. And so we need to get you on the list if you're a licensed insurance agent and willing to write more policies. Not just talking about writing your own. If you're going to write your own, then that's irrelevant. But write key person policies that we can direct to you. So that's scenario number one. Scenario number two is if you are a white label partner, but you don't want to write policies, which is fine. Either you don't have time, you don't have the interest, you're not licensed. It doesn't matter why you don't want to do it. Again, I'm not trying to recruit anyone, and just simply stating if you're not going to be writing policies, we need to have someone working with you to write these policies, because it's part of the loan package. It's like saying, well, I don't want to help clients with a business plan, and I'm not going to have anybody help them with the business plan. That's madness, right? That doesn't work. That's not what we've agreed to do, because there's three things we do as a white label partner, right? We build financial literacy, we build loan packages, and we provide access to capital. Well, you're missing one of the three if you're not helping build a loan package. So if you are a white label partner, but you don't want to write the policies, you can either do one of two things, and we don't care. You can either go find your own insurance agent to work with. And that can make a lot of sense, right? Because you can refer to them and they can refer to you. Insurance agents are usually kind of hunters in mentality. They're out prospecting. And if they know that you can help small businesses get guaranteed access to at least $100,000 capital with no upfront cost, you can get financing that's going to be able to cover the cost of the insurance policies. You'll be able to get a bunch of referrals. These could be your affiliates, right? We talked about affiliate marketing. So if you want to go develop your own insurance agent or agents, singular or plural, great, go do it. Recruit them as your affiliates. It'll work really well. I'm sure it will. Or if you just don't want to deal with it, again, email me and we're going to assign an agent to work with you. Where's that agent going to come from? Oops, from this list. Because we're creating an updated list as of October 1st. Super simple. Now, the only third scenario I think that's relevant to our discussion is if you are a white label partner and you do want to write the policies, because here, this group did not. Well, then great. You need to be writing those policies, and we're not seeing those policies often get added into the client's Dropbox. Again, if you go to iimfl.org, go to the white label page under module 4, you see the list of the items that we're asking you to help the client upload. You're getting paid on average $5,000 to do the role of a white label partner on a per client basis. One of the most important elements is getting the documents into the Dropbox that we create, arrange, and provide for you. And the key person policy should be there. All right, so I think we're at the point now we're going to open it up because we want to have lots of discussion. So if there are questions or concerns, first you need to let me know which of these three you are, because the answer to any given question will probably vary based upon your role. But let's get into it. So David had the first question a few minutes ago, said he didn't think it applied to him, but if you're any one of these three, now maybe you can see how it applies, David. Okay, David asked, David also asked, can he outsource this? Absolutely. And so that would be right here. You can develop a relationship with insurance agents that could potentially refer to you. That'd be great for new referrals. And then you could refer to them to write the policies. And so that is perfectly fine. And I think David had asked those questions before I got that far on the agenda, which is fine. All right, Samuel's licensed in New York, New Jersey, and Connecticut. Excellent. So that sounds like to me that you're a licensed insurance agent and you would like to write more policy, Samuel. So your action step is to email so we can get you on the list. Super simple. Now, again, I've been licensed for quite a while. Sometimes people get worried about states, like, well, which states do you need them? Or I'm only licensed, Samuel, is in 3 states, but I've always used Sircon, S-I-R-C-O-N. I guess it's sircon.com. And for next to nothing, they provide kind of a third-party service to get you non-resident licenses in other states. Typically, you can get a non-resident license in another state normally in 1 to 3 days, and normally it's minimal expense. So once you have a client that's wanting to get a policy, then I would just add it as you need. And so you may end up being licensed in 20, 30, 40, or all 50 states. As long as you have a client that's ready to write a policy, why wouldn't you get a non-resident license? Some of them are like Michigan, where I think, if I recall correctly, it's $35 and it's a lifetime appointment, not even an annual fee. Other states are different. In Georgia, I think I had to go get a background check, a fingerprint for a background check. So there's different requirements in different states, but I would advocate, again, do whatever you want. I'm not your insurance resource, but Sircon, S-I-R-C-O-N, has a really slick way of helping you get non-resident licenses, and you just add them as you need if you want to. All right, so let's see. Samuel says he loves it. Pauline was saying, yep, on a return of premium. So Pauline gets to underwriting. So that's a great point. So when we get back to the needs analysis, you're going to start to understand what all the needs are. And so there's no doubt, and this is kind of what Pauline is hinting towards, there's simplified underwriting. I was, before I stopped writing policies just because of being too busy with the rest of this, I was doing guaranteed issue policies. But the point is, I think what Pauline's getting to, the simpler the underwriting, the quicker typically the policy will be approved, the quicker that you're paid, and the happier the client will be. But you have to look at what the needs for the clients are, and maybe you're setting up more of a fully funded indexed universal life policy, for example, and that might require full underwriting. So that is up to you. We are not in the insurance role. We leave that to the agent, and you can choose the IMO, the FMO, the carrier, the provider, the product that you want to use. That is up to you. You're the professional in that space. We've dabbled with it and we started to get involved with it, but that requires a lot of focus, and we're focused on our 3 items: financial literacy, building the loan package, and getting access to capital. So we'll delegate that to you. So Dion's asking again, does he have to write with a certain IMO or FMO? Again, no, there's no restrictions. You write it based on what the client needs. Okay, Latasha asked, and so no, that list will be fluid. She's getting ready to take her life insurance exam on the 7th, and she didn't want to be locked out of it. So I didn't mean to word it that way, and that I probably did word it wrongly. So we're looking now to find out whom of you are interested in being on the list to write policies for others that don't want to write. We want to get that list created this week by Friday, October 1st. But any of you that want to be added later, that's fine. So it's not a closed list. I didn't mean to suggest that. But I know it sounded that way, but that wasn't my intention. I guess I was trying to create some urgency, saying this week we need to get the list together. But if you are not licensed yet and you later get licensed, then of course we can add you to the list. And so again, I see Ben asking about partnering. So our Zoom's great for interaction, but for specific tasks, I'm not smart or quick enough to juggle. So if you're wanting to write policies, email me, let us know, and we'll get you on the list. If you're a white label partner and you don't want to write your own policies, again, email me and we'll assign you an agent, or you can go find your own. But the email is an important action step. There's too much going on for me to properly take tasks from the chat. Ben, I apologize. Anna Marie asked, is there an insurance company better than another to write key person policies? Well, again, we're remaining independent. That is up to you. A lot of agents have really strong affiliations with certain companies, and that's fine. Others don't. I guess the answer is it just doesn't matter to us. It's up to you. If you're an insurance agent, you can work with your hierarchy there and determine the right carrier and the right product. We don't have the staffing to properly train and support on the insurance side. So it's relevant in terms we need it in the loan package, but the details of how to write the policies and that are on the insurance side, which is outside of our scope. Okay, so we've got that. Walter asks, in discussing the key person policy with the business owner, how large should the policy be? That is a great question. So you're going to do the needs analysis and figure out in its entirety what type of policies do they need and what type of coverage. But let's just drill in most specifically to the key person policy. Normally, you would write the policy for at least as much as the capital raise that they're looking for. So that way there would be an adequate amount of face value to cover the collateral assignment that could be needed. I've had a couple of you, and I say this respectfully, that were wrong, just flat out wrong. I'd have some people say, well, we can't write the key person policy until we know who the lender is. And I call BS on that. The lender is not the beneficiary, which is part of the policy. It's a collateral assignment that's added afterwards. And so we need to add the collateral assignment that does formalize who the lender is, but also the specific amount. And so just again, respectfully, it's wrong to think that we have to have a loan issued to go get a key person policy. And in fact, it won't work that way, because if the lender's requiring a key person policy, they won't even issue the loan if it's not in place. So we build the policy first, we get it in a loan package. It's often covering other needs, but it can serve as a collateral assignment. And Walter's question is, how big should it be? Again, the needs analysis and the client suitability will tell you most of that, but you'd want it to be at least for the amount of the capital we're going after. All right, and so Latasha has some other questions. So when a client comes in, you submit the client in on the white label client submission form on the IIMFL website, white label page. And so then we get the client set up. We send them the Adobe funding app. It's a one-page app, doesn't affect their credit. We send it to them. We copy you. They fill that out, comes back to us. We look for funding offers. We're trying to get them cash funding offers. If they're credible, they get cash funding offers. If not, we have a backup. But with the cash funding, I think this is where Latasha's going with it. Often they're going to get enough funding from that first tranche that's going to cover the refundable deposit, because they're paying you $2,500, Latasha, for the refundable deposit, cha-ching there. And then also they'll usually have enough left over to pay for their key person policy. And normally they'll pay for that policy in an annual premium up front. And so that's the way that the system ideally works. And so then the refundable deposit is refunded. And again, you can make the deposits refundable or non-refundable. That's up to each white label partner, how you have the client agreement set up. But the point is then the refundable deposit would be refunded to the client, if you do have it set up as refundable, after the guaranteed capital raise, which by default is $100,000. Okay, so who else has questions? Let me make it a little smaller so we can see the whole screen. Who else has questions on writing key person policies, next step action steps? And I see Timothy asking, and Timothy, you're exactly right. For life insurance agents, this is the best lead generation, at least one of the best lead generation systems that there is, because you're really taking the sale out of the insurance sale. Right. So you're generating leads by whatever method that you want to generate them, but providing access to capital, guaranteed $100,000 with no minimum credit score, no minimum time in business to qualify for the program. You're going to attract a lot of prospects, and then they become leads, and then they enroll in the access to capital. So now you can go into your QuickBooks or spreadsheets, however you manage your finances, and put in your accounts receivable, because you know they're going to pay you $2,500 for the refundable deposit after the first tranche of financing. You know they're going to pay you a performance fee, normally $10,000. So normally you can put into your AR, you're expecting $12,500 of monies coming to you from every client you enroll, plus then you have a key person policy that in many cases that you'll write. So I know that some of the most successful insurance agents, they have a niche. They have a way to generate leads. And this is one of those, is that you really don't have to sell the insurance. You offer the access to capital, again, $100,000 guaranteed, no minimum credit scores, no minimum time in business to enroll, no upfront cost, get the client on board, you do the needs analysis, and the needs analysis is going to reveal they probably don't have a key person policy, so they need that for the loan package, and you're probably going to find that they also have other needs. And so as an insurance agent, I don't know how you could find a much better door opener than access to capital. And by doing the needs analysis, you have a relevant, credible need to sit down with them in person or virtually to go through their life circumstances and figure out where their gaps in coverage are. So you should make more on insurance products through our program than you even do from the 12,500, because these insurance policies typically are going to pay perpetually lifetime residuals, where sure, you'll make 12,500 for each access to capital client in the front end, but the insurance policies can continue to pay for a lifetime. All right, anyone else have questions on the key person policies? Again, the action steps would include, if you are an agent, you want to write for other people, we need to get you on the list. Email. If you're a white label partner and you're not going to write your own, you've got to cover this. This is part of the loan package, right? So either go find an agent, develop a referral relationship with them, and that's just fine. We don't need to know who they are or what your arrangement with them is. That doesn't matter to us. But if you want us to assign you an agent from the list, then you need to email us so we know to do so. And that's really what we'd like to do. I'll close on this. So let's say that we end up with 50 agents on this list, which will probably happen, maybe more, but regardless, what I would recommend is, let's assign you, if you're a white label partner, let's assign you one agent, like Samuel, for example. And so Samuel's going to be your go-to person. And so you develop a relationship, you develop comfort and good communication. If you're working with 5, 6, 8, 10 different agents, I just don't think that the client gets as smooth of a process. So we will, if you're in this second group here, we will assign one agent for you to work with, and that agent, and if you're not happy with the agent, then of course let us know and we can substitute, or you can go find your own. But my point is, a 1-to-1 ratio tends to develop a team versus just like a vendor referral relationship. Okay, any other questions that anyone has? This is a big deal. You know, you should generate more income. Again, in closing, you should generate more income from your clients through insurance, asset protection, and related services than you even do from the 12,500 that you should make by running them through access to capital. So this is doubling your income. The word that I heard this morning as we were preparing for this, and it's probably too strong to close on, is it's silly. It's silly to not help people with their asset protection. And this key person policy is not an insurance sale. It's an item on a compliance checklist. They're going to do it. And the funding should be available for them through their first tranche of financing. All right. Well, thanks, everyone. We'll see you back tomorrow morning. Great to talk to you. Bye-bye.